moving to more outcomes based and kind of really betting the future on being able to tie things to outcomes, which is like a double-edged sword, right? If you don't deliver on it, then you hurt your business. Advertising does not influence 100% of your decision to do something. So I think it is a bold claim to kind of move that direction.
But I can't help but think about those award-winning agencies that when having that full creative license to do something bold and innovative really changed the game. And I wonder how moves like this, how it stymies that creative development. You're listening to Media Monitor, where we break down what's happening in the media and the advertising industry and tell you what it actually means. All right, welcome back, Sean. Excited to see you. How you doing?
I'm all right, Kelly. How are you?
I am good. There's lots going on out there, and I thought this week maybe we'd revisit a framework that we've used in the past where we go through the headlines and do our guideline grab bag, sharing some media morsels.
Yeah. The quick and light hits around headlines. I think that's a great idea for the week. And then to kind of top it all off, I have an amuse-bouche for us at the end to kind of echo your alliteration. I haven't thought of many, but maybe we could do like a data delight. Or something along those lines. Again, open to feedback, commentary for folks that are listening. But we'll share some kind of initial research that we've started on the path of that we're like not yet fully baked and ready to go, but like some interesting little tidbits that we have found in our data that I thought may be worth talking about. So that feels like a nice full episode for the week. Excited to talk.
Yeah, I love it. So I saw a couple of headlines that grabbed my eye this week, and I'm sure you did too. I can kick it off with
please.
Netflix backing out of the bid for Warner Brothers, paving the way for Ellison to take over. I'm so curious your thoughts on this. I have to say, I'm not surprised.
So much drama. Yeah.
But it is. I feel like I'm watching a telenovela here, just this
It's like Succession
back and forth. And so I saw in the New York Times coverage of this, the quote that, the deal is no longer financially attractive. It was considered a nice to have at the right price, not a must have, according to Ted Sarandos and Greg Peters. And I'm curious. It's kind of like, how must that have shifted things? They heard this new bid and they said, nah, we're good.
Yeah. Yeah. I mean, they're throwing, I don't know if the final terms have been disclosed yet, but like clearly they're higher than they've been in the past. And they were offering, bananas, per share prices in terms of the offer, and the elder Ellison got in and kind of like personally said, hey, I will personally back this up with my own money. And so combination, it started to kind of clearly not be a profitable endeavor for Netflix, given kind of what they would probably get out of it in terms of the library from HBO Max, etc. And even then, the Netflix deal was just for pieces of it, whereas this is the whole thing. So it is kind of crazy, and also starts to push the bounds of like financial sense. Like, will there be a return in terms of the overall investment that's going to be made? No knock on HBO. I think they produce great content. But like, if you think about what is the shining jewel, right? It's like CNN, HBO. And it's like, is there really the financials behind it, or is it something else driving this, right? And I think the something else is very much what's kind of behind the decisioning. And it's not necessarily a financial one of why they've gone out and tried to acquire it.
Yeah, I totally agree with you there. What do you think the masses feel about this? Do you think that this is better for the home viewing experience, or how does this change for advertisers, for the customers? What's your outlook there?
Yeah, I mean, it's a fair question. I think from a customer perspective, my guess is it'll probably be, I guess in one way, is better that there's a bit more consolidation around services. On the flip side, I think what we've seen in the past is when that happens, we tend to also see subscription rates go up and, advertising. So from a consumer standpoint, if you want that content, it might be harder to get if you're kind of figuring out what streaming services to pay for, when to pay for them, and things like that. That would be my initial hunch. From like a advertiser perspective, I wouldn't be surprised if not much changes in the, in the short term, right? Still put it on media plans, figure out where you want to buy, all of those things. And it'll really come down to, I think, back to the consumer. because if consumers leave in droves or they don't like the new kind of packaging and things like that, advertisers kind of in many ways follow the eyeballs. So I don't know if like from, advertisers themselves are going to feel it so much as consumers might. And then there's the broader narrative, which again, we'll see how it plays out, but movies, right? I think with so much consolidation happening in very few studios, movie theaters, they need a new title every week in order to kind of bring people back and make money. And it's not even that like, getting licensing to show those movies has gotten expensive, because it has, but it's also like the frequency of when to go back to a movie. I have two small kids. I know you have a small child. And I'm looking at like what we can bring and try to like, kill an afternoon at a movie. And it's like we've got maybe 2-3 titles for the whole year that might seem relevant to us. And it's like, not that I want to say growing up and being nostalgic, but, the release schedule back when we were, children was you would get a new kids movie every 2 months in terms of being able to return to the movies, frequency, etc. It's just not there in terms of theater going experience. So like that's, I think, the bigger question mark of what happens there.
Yeah, I agree with you. And I wish that we had that experience, but I just think that the entire ecosystem has changed. We want faster produced content available in our homes, and that's coming at a cost of those movies being generated. So it will be interesting to see how it plays out, but I think we're nearing the end of this saga. We started one of our pilot episodes. We talked about this.
For sure.
And now here we are.
Here we are.
So that one really stuck out to me. I had another one, and I'll share it now. So WPP CEO Cindy Rose, she came forward and
quite
said,
a kerfuffle.
Yes, she did. She said WPP is no longer a holdco as the $676 million annual savings drive begins, as quoted in Adweek. I think she is really shaking things up. She has a strategy called Elevate 28. It's a multi-year plan. And I think it's summed up well to be a little less holdco and a little more co, as she said. I, for one, think her strategy makes sense. She is really focusing on AI, AI-backed divisions, and realigning the whole ecosystem under 4 pillars and shaking this whole thing up. But it's a total departure from the ways of how an agency holding company works. So I'm curious your thoughts on this. What does it mean for our community?
Yeah, I would say I don't know. Here's the 2 thoughts that I would have high level is one, I think that there needs to be a transition that happens among kind of the traditional agency model, right? I think just the nature of it has evolved. I am not one of those doomsayers that says there's no relevancy to an agency in the digital age and the age of AI. I think there's very much room for agencies to exist and transform. And so for the ones that do it well, right, I think that they will continue to lead the pack. For the ones that are niche and specialized, maybe not holdcos, but midsize, right, I think there are plenty of examples out there of agencies doing well. But it is a pretty bold transformation, to your point, in terms of radically shifting the model. The thing that stood out to me was also kind of moving to more outcomes-based. And kind of really betting the future on being able to tie things to outcomes, which is like a double-edged sword, right? Because if you don't deliver on it, then you hurt your business. And in many ways, advertising, I think most marketers don't believe this, but let's be honest, like advertising does not influence 100% of your decision to do something. Click on something, buy something. And so from an outcomes perspective, advertising only influences so much, despite, whatever model will tell you X, Y, Z. And so I think it is a bold claim to kind of move that direction. I think ultimately, probably the folks that will benefit most from this realignment is going to be less agencies and more the platforms where there's very obviously some sort of like performance measurement baked in. So then that way it's much easier for them to turn around and say, here's the outcomes we delivered, etc. And so I think for players that specialize in that, like a Google of the world, Meta has been doing this for a while of like, you can go in, check everything, right? They ultimately might be the ones that benefit the most because it's easiest to show outcomes. Whether or not they're the outcomes you want, whether or not they're outcomes tied to your brand campaign, right? I think there's this perverse incentive that if you're looking to find outcomes, you're going to find the platforms that show them to you the easiest. And that's actually where I would say is where my head's at when I kind of saw this announcement, as I went straight to those like outcome-based conversation and less on like the shakeup of like, we're no longer a holdco, we're a co. which I think is an interesting take. I think the outcomes really is the thing to me that really stood out as a very different departure than a lot of other agencies right now.
Yeah, it makes me think we've been having a lot of conversations, you and I, and internally about brand marketing versus performance marketing and, how the pendulum swings back and forth between those two and kind of where we are. And I totally agree with you. This is going to land more on the performance side, but I can't help but think about those award-winning agencies that, when having that full creative license to do something bold and innovative, really changed the game for the brands
100%.
they were serving. And I wonder how moves like this, where people are in defined silos and boxes, how it stymies that creative development and what it's going to mean, like you said, for independent agencies that are going to be able to be the champions of this because they won't be forced to fit within the confines of these four pillars. So I think it'll be really interesting to see how it evolves.
Yeah.
And I got a front row seat, so I'm staying tuned
Yeah,
in.
for sure. Yeah, I mean, even on that front too, right? In terms of the performance angle and what happens to that creativity. I think I've brought this up on a prior pod, but I am a loyal Old Spice customer for all of their deodorant, and literally, I didn't really care until I saw kind of the mid-aughts commercials, which were just wild and unchained. Of like, I'm on a boat, look over there, right? And it's this great campaign where they fundamentally changed what the brand was, right? It was considered to be like an older person's deodorant prior to the campaign. Then they kind of just did a brilliantly silly creative campaign, and almost not overnight, but very quickly they kind of transformed their whole brand image. And now I'm just like too old to care to change, and it's fine. So it's like it works for me. I'm just gonna stick with it. But I've been a Old Spice customer now for like the better part of 15 years, solely based on what I thought at the time was an amazing commercial. It's like the one time that advertising was like, you know what? You've won me over. But that's not like, you can't pick that up on performance. My lifetime value is not going to come through on like a quick click through, right? That's a brand build that you got me. And now you have me for a very long time, which again is where I struggle with that whole like brand performance dynamic. So yeah, so time will tell, right? To your point, we have a front row seat to figure out what this will show up as. My guess is it's going to be both, right? There's going to be some things that succeed, and there's going to be other things that probably need to be reworked.
Absolutely. Man, you're making me just think back to those brands, and it's like there's this moment where you're open and ready, and
Yeah.
when they get you,
And
they
you're like,
gotcha.
And you're like, yeah, cool. I am now this person. I associate with this brand. I'm buying this brand. I use this brand, and I tell people about this brand.
I recommend it.
Yeah,
Absolutely. And I
for
have
sure.
no affiliate link to be
None.
profiting off of it because
No.
that didn't exist
Nope.
when I first decided it was my brand of choice.
Exactly.
So what caught your eye this week in the headlines, Sean?
Two things that stand out to me is one, Trade Desk and their earnings call. They put up some pretty impressive numbers, both in terms of revenue growth for the year. A lot of their fundamentals look good, right? They're up 18% for 2025. They've kind of beat some earlier expectations, but because they gave a guidance and said, well, for Q1, we're thinking that it's probably going to be closer to 10% growth year over year. There was a pretty rapid kind of, trade-off of the company and kind of a pretty substantial drop. And it's one of those interesting things where I think like the Trade Desk is still doing a remarkably good job in terms of growing their business, evolving in kind of the programmatic marketplace, thinking of new innovation ideas to kind of like throw out there. And it seems like they just can't escape their former selves from like a couple of years back where they were putting up, more in like the 20-30% gains. And like times have changed, right? There's a lot of competitors on the block, but like for what they are, they're doing pretty well. But there seems to be this tension where like despite them doing well, it's not what it used to be, and so they're kind of taking a hit for kind of they're like almost competing with themselves in the past. And it's just this interesting dynamic that I'm seeing play out, in terms of the realities of their revenue growth versus the realities of their expectation, and it's tough right now.
Yeah, as someone who worked at a DSP that sort of still exists today, I've had that view where I've watched the DSP, demand side platform, for those unfamiliar, I've watched that programmatic space evolve. And what's not talked about enough is how many players in that space have gone by the wayside. Some of the biggest players back in the day, the Rocket Fuels, the Media Maths, they're gone now, and they
Yeah.
were the primo players, and the trade desk is persisting. And I think what sets them apart from who they're competing with today is kind of programmatic is what they do, right? Whereas they're competing with the DV360s of the world, Amazon DSP, it's not the only thing they do. And so it's really hard to compete, but they still are. They still are. But
Yeah.
people want them to be doing what they once did. And it's really tough to
It's
play in that space. So I
100%.
I agree with you. Did you see anything else, like any of our data kind of give you some perspective on that makes sense to share with this audience?
I do have a little data dip, a data delight. But the other headline that I wanted to kind of quickly toss out there too was that the NBA is kind of taking non-binding bids to open up their European league, which I thought was super interesting. And they've already been pretty explicit talking with Amazon Prime Video, YouTube about kind of leading streaming in the European league. And it's interesting because the NBA is one of those where we've seen it over the last 10 years where they've kind of progressively started to expand outward into other markets.
Mm-hmm.
And it's one of those interesting use cases where, for example, with like hockey, especially in light of the Olympics, right? Is like you have,
Wait, by
uh,
the way,
okay,
sign your kid up now. If you want your child to play hockey, you better get in there, because what I'm hearing is after that win, youth
is
hockey is
the
it's
sport?
gonna blow up this year.
Yeah,
So
that's
make sure
fair.
you get in there.
Yeah. Yeah,
Anyway,
but
back to
like
you.
yeah. So like hockey, right? It's pretty heavily concentrated the US, Canada, some of the, some other parts of Europe, but like when then kind of you see the Olympic teams play out, it's kind of the team countries are often basically the same teams that are playing professionally. But what's fascinating is the NBA. If you look back to the Dream Team in the 90s, those were pretty much all US folks, and so they just dominated the league. But you fast forward to the most recent Summer Olympics, and basically all of the top competitive teams had 2, 3 NBA players from not the United States in terms of competing. And so the NBA has largely started to kind of really move out into other markets. It's big in China in terms of
Mm-hmm.
viewership, ad revenue, all of these things. And so this is just a fascinating kind of step on their forward progression of like building what I think in many cases is like probably the third kind of biggest world sport, or moving in that direction behind obviously soccer, football for our international listeners, and to a lesser extent rugby. And so it's this fascinating move where they're starting to open up markets. And so that kind of just stood out to me this week of clearly they're making moves, and it's curious to see how it's playing out.
Yeah, it's a natural next step. And part of me wonders why it's taken as long as it has for some of our US sports to make their way into international markets. But they're out there. I mean, you see the NFL playing more and more games internationally, and it's coming. So,
Yeah. I mean, the
I,
NFL has done like the London game the last couple of
mm-hmm,
years, but like that's a tougher sell internationally. I think it's
right.
probably easier to sell soccer into the US than it is to sell the NFL into Europe.
But we're gonna keep trying.
Yeah,
I know we are.
for sure.
Yeah. So go back to the trade desk. You said you had a data delight, a
Yeah.
data. Yeah.
Work in progress on
Yeah.
titles. We'll
Okay.
we'll we'll
Okay.
test it. But one of the things that we've kind of been exploring is there's always this tension, right? And we brought it up in this conversation between brand and performance, and like where spend is oscillating. And what's interesting is like we can cut our data in a couple of different ways that gets us close to that in terms of figuring out what is the end goal of this campaign and what is it doing. And so if we kind of cut our data to better understand that dynamic, you look back at 2017 in the US. And right now we have that kind of lever filter specifically for the US. So that's why I'm just highlighting the US market. But from like a brand performance, roughly 75% of spend back in 2017 was brand, upper funnel driving that. And then the rest was performance. You fast forward to 2025, that has dropped down to 60-40 in terms of a split between, brand versus performance. But, and then again, it's like, oh yeah, well, of course, like everything's moving digitally, which I think is actually the more interesting piece,
Mm-hmm.
because when you look at the growth of digital versus essentially everything else, the gap between your like what was digital versus performance was even back in 2017, right? That 25% of all ad spend was like performance oriented. Only 18% in our data was digital. So clearly there were other places where performance was still a thing. and still driving from an ad campaign perspective. But you fast forward to today, essentially, and what's fascinating is despite all of the narrative of like this whole like performance equals digital, digital's what's driving performance, the overall kind of performance shake has actually grown at much faster rates than digital has. And so there's clearly, it's this fundamental shift where there's more money being poured into performance and it's spreading everywhere. Like digital was probably a catalyst to driving it. But when you look at like our digital versus everything else split, it's 35-65, whereas performance is 40-60. So even though that doesn't sound like much, the performance spend itself has grown from 26% up to 40% in a much faster time frame. And so it's this interesting kind of dynamic that's playing out where there's just a bit more performance dollars in the market than there is digital. So it's not just the narrative of digital alone is what's driving this change. It's clearly digital plus kind of a shift in mentality from a marketing perspective that I thought was just interesting, that needs probably a little more exploration, but this is definitely at least a slide that's going to pop up in kind of our market review decks that kind of go out monthly. I just got to figure out what's the hook, but it's at least for today, a data delight.
I love it. Well, if you want more information on that, we're always happy to share.
Where can people find us?
Well,
let's do the hook.
You got to reach out. You got to reach out to Guideline, right? Give us that email, Sean.
Yeah, it's probably the best one is press@guideline.ai. People are standing by and waiting for those emails.
They are. If you want those data delights, that's where you send the note. And
yeah.
I think that does it for us this week, Sean. This was a good little synopsis of the week.
I think so. It was great, as always, catching up, and look forward to chatting next week.
All right. See you later, Sean.
Thanks. Bye. That's Media Monitor. Follow us and subscribe wherever you get your podcasts every Wednesday for a new episode. And as always, thanks for listening.